Hello, my name is Darryl Robert Schoon. When I published my book, How to Survive the Crisis and Prosper in the Process, in the spring of 2007, I suggested that one of the ways to profit from the rise in the price of gold was the use of ETFs. At that time, and still is now, the major one for gold is GLD, Street Tracks, and another one, silver, is also used by investors to play the price of silver. I have changed my mind about these investments, and I'm not saying not to invest in them, but to realize the dangers that they pose for people who expect that these investments in the end will be able to save their wealth. In the end, they will not. They are paper gold and paper silver as opposed to physical gold and physical silver. Things are changing rapidly, and this is one area in which investors should be aware of the changes that have happened. In 2001, Peter Warburton wrote an extraordinary little piece that I would like to quote from, and it's talking about the banking system. On one front, the central banks preside over the creation of additional liquidity for the financial system in order to hold back the tide of debt defaults that would otherwise occur. On the other hand, they incite investment banks and other willing parties to bet against a rise in the price of gold, oil, base metals, soft commodities, or anything else that might be deemed an indicator of inherent risk. Their objective is to deprive the independent observer of any reliable benchmark against which to measure the eroding value not only of the US dollar, but of all fiat currencies. Equally, their actions seek to deny the investor the opportunity to hedge against the fragility of the financial system by switching into a freely traded market for non-financial assets. This statement by Peter Warburton goes directly to the issue that we're talking about today. SLV and GLD, the gold and silver ETFs, are controlled by the major banks. JP Chase is the custodian of silver for SLV. HSBC is the custodian of gold for GLD. And at the end of fourth quarter 2009, JP Chase had a short position equal to 30% of the entire COMEX silver market and 25% of the entire COMEX gold market. So what we have here is the custodian banks for GLD and SLV holding massive short positions against silver and against gold. So you've got the custodian of these accounts playing against the very positions of which gold investors and silver investors are trying to hedge their positions in today's declining markets. I suggest that you use, if you are going to invest in SLV and in GLD, to not do it to hedge against the collapse of currencies, which is ongoing right now, but to use them perhaps as money market funds as we head towards the end. Because at the end of the day, only physical gold and physical silver will be there as forms of wealth. The paper ETFs, GLD and SLV, will go the way of all paper assets. This is a warning.